Hi, this is Ron Janish with AndrewsCourse.com. Gonna delve into the Andrews concept on money management. Okay, what we're gonna do is gonna show you some actual trades, some actual. Look at real things that are on right now. Right. So here's the theory behind it, and the theory is just from simple math. If somebody starts with $20,000, they can effectively have a couple of trades a week, provided the trades only last 2 or 3 days, and which is what I'm going to show you, what I do. And then maybe once in a while there's a trade that is on much longer. If you have a much bigger account, you might do that. So this is assuming that somebody starts with $20,000 and does 2, 3 contracts on at a time, at the most, maybe 3, maybe 4, not much more than that. And it assumes certain averages. First, let's take a look at the actual trades and we'll see what the reality is for me today, and then we'll pop these numbers in here. Okay, let's go to sheet 1. Okay, this is a simple reward risk table, and one of the positions I have on is in British pound. This is my entry, this is my target, and this is my stop area. As you can see, my risk is roughly $400, and my potential reward is roughly $2,000. Okay, so that gives me the ratio of 5 to 1. Okay, now let's take a look at the actual trade. Boom. Here it is right here, got it on. And note that this is something that could easily be gone in a couple of days. Okay, more than 3 or 4 days is real unusual in these short-term small trades. Okay, so let's move on from this one here. We've seen what the numbers are. Let's go to another one. Let's go to heating oil. Very different. Let's look at the 4-hour chart because we get a little more space in here for stuff. And this one here is, let's see, what is it? It's short. Okay, it's short, one contract. This is just the demo account here. It's real money. Okay, and it's short at this value here, and the open on this position is this value here, and target is over here. Okay, and there's the stop. Okay, so, and let's see what we're looking at in terms of reward risk tables on this one here. On this one, the reward risk is 5.04, and so this is the entry, the target, and the stop area. Simple as that. It's risk of about $546, and the potential reward $27.51 minus commissions and NFA fees and whatever. So that's the reality of it. Okay. Now let's look at the third one. The third one's a little more complex, and I'll show you. The third one is, I'm going to show you here, is RTY. And in this one here, we actually have 2 positions on. We have one that's a short-term position where I have the stops and the exit for the short term. Okay, and I'll get you the numbers for that in a sec. But I also have a long-term position on, and the long-term position, the target is way down here. Okay, so this one might be on for a few months. And what I do is I'll trade these with Andrews in addition to trading the shorter term signals. Okay. Now let's take a look and see what the numbers are on this one here. Well, this one looks, oh my gosh, golly, right? All the way down here is the target. Must be 800,000 to 1. No, I don't think so. Let's take a look. RTY. For that one, it's only 4.69, but it's still between it's still over 4, or let's say over 4.5. Okay, and that's our entry area on the one that's in the red right now. And then we have the target, and there's the stop area. And if we take a look and we see we have some much bigger numbers here, we have 2750 as our risk and 12,900 as our potential reward. Now, in a trade like this, you're only going to do these kind of trades if your account is big enough to handle it, right? Because we're risking a lot more money than the $400 or $500 that we do on the shorter term trades. Now we're going to take a look at what the okay, this one got in at 1569, and our stop is, let's say, 1576, so 1569 and 76. Let's see. Boom. Okay. Just adjust our numbers. 1569 and six, and let's adjust our target on here, so our target is much closer, and the target is 1530. Okay, so okay, so here we are, and so your reward risk ratio is 5.57 to 1. Okay, and our risk on the trade is $350. Potential reward, if all goes well, minus commissions and fees, is we will get it something a little bit less than $1,950. So let's go conservative on these numbers here. Let's say we're looking at a win-loss ratio of 4.5 to 1. Let's say we have 9 trades. For every 9 trades that win, 2 trades lose. Okay, if we have that kind of a ratio and our average trade is, let's say, makes a profit of $22.50 and our average loss is $500, then what we come up with, we start with maybe $15,000, $20,000, right? So at the end of the month, if we have only 30% winners and the rest are losers, okay? And the reality is nothing ever comes out to the exact average, as you know. It can be different. We come up with $32.50 a month on $15,000 or $20,000. That's still pretty decent. Okay, if we're good, we might do 40%, and then it's $6,000 a month. Okay, and on upward it goes. And this is what happens at the end of the year. So at the end of the year, someone who does 30% profitable with, at every month they do $67.50 in profits and $3,500 in losses, wind up with at the end of the year, boom. This is not compounding, just straight simple math here. And so this is what we're looking at. Okay. So the name of the game is to take trades that have a high probability of winning and have a reward risk ratio over 4 to 1, preferably 4.5, 5 to 1 in most cases. Okay, and so you just, setting up a table like this is easy. If you're one of my course members and you want a copy of this one here, it's a simple Excel spreadsheet. I'll send it to you. Just want you to know this is a beta copy. I say beta because this way I haven't yet filled in some of the things properly. Probably I may have left some things out. So you have to make sure that everything's perfectly wonderful for you. Okay. See, I don't have anything filled in for PT, PL, platinum. Okay. So anyway, this is to give you an idea of how we handle the money management part. And part of the scheme is to combine short-term trades and long-term trades. So if I have a few trades on that are very long-term, a month, 2 months, 3 months, to keep me kind of active in the market, I might have 1 or 2 or 3 trades that are short-term, just a few days. Okay, I showed you the short-term trades, and I showed you a long-term trade. And sometimes they're both in the same futures contract. So anyway, I thank you for your time and see you next time.